Good morning. Welcome to Top of the Morning by Mint, your weekday newscast that brings you five major stories from the world of business. It's Thursday, March 20th, 2025. This is Nelson John. Let's get started. The U.S. Federal Reserve has kept interest rates steady at 4.25 to 4.5% for the second straight meeting, as Fed Chair Jerome Powell stressed patience amid economic uncertainty. The central bank expects to cut rates twice this year, but is in no rush to act. "We're not going to be in any hurry to move," Powell said, citing trade tensions under Trump's presidency and a cloudy economic outlook. The Fed revised its 2025 GDP forecast down to 1.7% from 2.1% and raised its inflation estimate to 2.7%, above its 2% target. Wall Street cheered the policy decision, with the S&P 500 posting its best Fed day gains since July and gold prices hitting a record high. The Fed also announced plans to slow its balance sheet reduction, allowing fewer Treasury holdings to mature each month. With inflation still a concern and economic risks mounting, Powell signaled flexibility, saying the Feds will act if conditions worsen. But for now, the central bank is staying the course, watching how Trump's trade policies and global uncertainties unfold. After 4 luxury residential Trump Tower projects, the Trump Organization is making its first move into India's commercial real estate market with Trump World Center Pune, a 2-tower office complex in the city's North Main Road district. Developed in partnership with Tribeca Developers and Kundan Spaces, the 1,700 crore rupee project will span 1.6 million square feet and feature a premium retail boulevard and India's first Trump Club. One tower will cater to smaller office buyers, while the other one will focus on leasing larger office spaces. Projected sales are estimated at 2,500 crore rupees, with completion expected by 2029. There is a dearth of premium office buildings in India, says Kalpesh Mehta, founder of Tribeca Developers. The project, modeled after New York's Trump Tower, aims to redefine Pune's commercial landscape. Eric Trump, EVP of the Trump Organization, calls the project a milestone, reinforcing India's growing appetite for Trump-branded developments. Pune's commercial real estate is on the rise, with a record leasing of 79 million square feet in 2024. Now, experts believe that Trump's entry will add significant value to the city's booming office market, largely driven by IT firms and global capability centers. The world's largest warehouse owner, Prologis Inc., is making a bold play in India, with plans to invest $500 million by 2026 to develop large warehousing parks. And that's just the beginning. "We are having very big growth ambitions for India. The Grade A warehousing market is underserved, and there is huge potential for growth," says Joseph Ghazal, Chief Investment Officer at Prologis. The San Francisco-based giant, which counts Amazon among its biggest clients, is setting up shop in Delhi, Mumbai, Pune, Bangalore, and Chennai. Over the past year, it has already secured 270 acres across Chennai and Bangalore for its first set of projects. Prologis, which manages a global real estate portfolio of 1.3 billion square feet, is entering India at a time when institutional investors are ramping up their presence, reports Madhurima Nandi. The country's Grade A warehousing stock has quadrupled since 2019, with global players like Indospace, Blackstone's Horizon Industrial Parks, and Ascendus First Space leading the charge. While warehousing remains its primary focus, Prologis hints at future expansions, possibly into data centers. For now, it's all about scaling up and transforming India's logistics landscape. While the Nifty 50 has slipped 3% in 2025, Fevicol maker Pidilite Industries has fallen by 6%, holding up relatively well due to its strong volume growth. The company remains committed to double-digit expansion, backed by a 9.2% volume rise and an EBITDA margin nearing 24% for the 9 months ending December 2024. Pidilite is driving growth across 3 categories: its core business, Fevicol, Fevikwik; growth brands, Dr. Fixit, Roff; and pioneering products, Dr. Sippy, Jowat. The contributions of core brands has dropped from 80% a decade ago to 52%, with newer segments gaining ground. Analysts remain optimistic about Pidilite's long-term prospects, citing infrastructure expansion, real estate growth, and rising domestic manufacturing. Jefferies projects a 13% EBITDA CAGR and 16% profit CAGR through FY 24-27, driven by premiumization and product innovation. Challenges persist, including weak demand, geopolitical risks, and rural market sluggishness. Investors are also tracking vinyl acetate monomer (VAM) prices, which impact margins. However, Pidilite's B2B segment is a bright spot, posting 20% volume growth in FY25, outpacing its consumer business. While short-term upsides may be limited, Pidilite's brand strength and market leadership keep it well positioned for future growth. A heavy reliance on the U.S. healthcare market is proving to be a double-edged sword for three Indian tech services firms, Sagility, Indigene, and IKS Health. Analysts warn that their lack of diversification, policy risks under Donald Trump, and the rise of AI-driven automation could spell trouble. All three companies, which went public in the last year, derived the bulk of their revenue from U.S. clients. Sagility, $574 million revenue, gets 89% from health insurers, while IKS, $220 million, serves only healthcare providers. Indigene, $313 million, focuses on pharma firms. Their stocks have tumbled. Sagility, negative 21%, IKS, negative 13%, and Indigene, negative 12%, amid a broader mid-cap IT slump. Trump's potential cuts to Medicare and Medicaid could hit insurers and in turn reduce demand for outsourced healthcare services. Meanwhile, AI threatens to automate core tasks like claim processing and clinical documentation, which these firms rely on. With high client concentration and competition from IT giants like TCS and Infosys, these companies face a tough road ahead. Analysts predict industry consolidation as U.S. firms prefer market-dominant vendors. The big question here, can these firms evolve before AI reshapes the sector? That's all for today. Thank you for joining in. We're eagerly looking forward to our next Top of the Morning episode, which will be packed with the latest in business news. Until then, this is Nelson John signing off. Have a tremendous Thursday.